What's up, everyone? This is Silver Slayer, and welcome to your daily silver stacking video. Thank you for tuning in. Seriously, if you're watching this video, even thinking about stacking silver, welcome. I mean, I have a big role to play, making videos, talking about silver, but also you watching the videos, liking, commenting, subscribing, even sharing also plays a major role. So thank you, at least just for watching. I do encourage you to like the video, especially subscribe, because I post daily videos. I go over so much every single day. Look at some articles I put together. So first one, gold may rise, but silver may double in 2022. Another one, keep an eye on silver prices as inflation heats up. Then we have the Silver Institute tips exceptionally promising 2022 for silver demand. We also have another one, silver demand hitting record highs this year. That's just a few that I picked up, but I also have a source that covers every single article posted about silver each day. Look at this. This is in 2 days, February 10th to February 11th. All these articles are written in a 2-day time period. What I do is I skim through every single one of these articles and I pick a couple of the best ones. Now, that's just one source. I have 2 other places as well. So every day you're going to be updated. It's really important to subscribe. Plus, I'm doing a major giveaway soon. And I started the first ever silver stacking podcast. My co-host is investing with TJ down here as well. We both are very educated in the precious metals world. He's becoming a chartered financial analyst, so he's more of the numbers guy, the charts guy. I'm more of the silver stacker. So it really does make a cool podcast. We've posted 3 episodes, and the first 1,000 subs are going to be entered in the silver giveaway. We have 779, so not many slots left. You definitely want to go check out the silver stacking podcast. Now, let's look at this. Gold may rise, but silver may double in 2022. Why? By the way, I posted a video earlier today talking about why silver is so much better than gold. I highly recommend you go check that out as well. But let's talk about how much better, right? There's a reason why my name is Silver Stacker, or Silver Slayer, not Gold Slayer. There's a reason why I'm a silver stacker, not a gold stacker. Now, the price of gold may reach about $2,100 an ounce, which would be the highest price. It broke past $2,000, but they're saying it could go even higher. So up from its present price around $1,800 by the end of 2022. So however, silver prices could hit $40, roughly double from where they are today if certain conditions are met. Now, I don't think silver is going to explode this year, not next year, not even the year after that. If we're talking about, let's say, triple-digit silver, because that's usually where if I say like explode or skyrocket, I would talk about skyrocketing 50 and above. Now, if you really want to talk about an explosion, it'd be triple digits. Now, I don't think we're going to see triple digits until the year 2025. That is when the silver shortage will be in full effect. Because by then, we will be putting the Green New Deal in full effect with solar panels globally. Electric vehicles are going to be ramped up times 3 by then. I mean, every automobile company by the year 2030 is going electric. So by the year 2025, all of that will be in full effect, and the silver shortage will be much more extreme. I think that's when we would really see triple-digit silver. So anyways, I just want to throw that out there because a lot of people don't give you actual time frames. They'll beat around the bush. But I wanted to give you an actual year that I think silver would hit $100. Now, this article, they're talking about $40 by the end of 2022. So, gold market commentary is often dominated by a lot of noisy perma-bull commentary. We've built a model to provide a clear signal. Its 10-year track record speaks for itself. Since 2012, Monetary Metals has accurately predicted 75% of future price moves in gold and silver, and the gold to silver ratio over a 1 to 2 year period. The proprietary model issued a buy signal in 2020, and that's when silver was $11, by the way. And that was when the gold to silver ratio was 125 to 1. So that's the price of gold notched a new time high, climbing over $2,000 per ounce. All right. So consider the following reasons for a gold price spike. A growing percentage of corporations are considered zombies, a bank of international settlements term for a company overly dependent on outside financing in order to continue, basically, right? And that's what that's why there's been so much gold confiscation in the past. And yes, they have seized people's gold. Executive Order 6102 by FDR, basically saying, all you guys, give me your silver. I mean, give me your gold. And if you don't give me your gold, you're paying a $10,000 fine or 10 years in prison or both. And that was a long time ago. So that's equally $100,000 today's time. So you had to turn in all your gold. You couldn't give it to your friend. You couldn't sell it anywhere. You had to turn it in. Yes, they'll pay you spot price, which was pennies to what it is now, like $20. But they did it, and it's happened numerous times throughout history, not just in the United States. And they, when I said silver, mistakenly, there has been situations where they've banned silver in 1980, Silver Rule 7, which led to Silver Thursday, where the price got cut in half, and that was directly from the Hunt brothers, the three Hunt brothers that cornered the silver market, owned up to 77% of the global silver supply, turned all those contracts on the COMEX to physical delivery, and the government wasn't going to allow three people to own 77% of the global world, because even the supply, because even back then, silver wasn't as useful. But imagine if they owned 77% of the global supply, they wouldn't be able to make all the things that silver is used for. So they had to do something, which they banned silver. You couldn't buy it. You couldn't sell it to anyone. You had to sell it directly. So basically confiscating it, just in a different way, which was very interesting. I made like a 3 or 4 part docu-series on that. If you want to go back in my videos, it's very interesting. I just want to throw that context out there. But anyways, sorry, I ramble a lot. Usually when I do ramble, it's something that's worth rambling about. I'm not one of those people that's gonna talk about what I ate for lunch or something. I want you guys to be interested in what I say and have a value of what I speak. So, anyways, the Fed has effectively subsidized zombies for years with its zero interest rate policy, or ZIRP, keeping short-term interest rates at near 0% to encourage economic activity. Zombie debt is especially vulnerable to any interest rate rise, and in the face of this growing default risk, investors likely will demand assets with low to zero counterparty risk, example gold. And yes, investors see gold safer than silver. Silver is called the devil's metal because it's more volatile, because it's a much smaller market. So the Fed will not be able to raise interest rates much for very long without triggering a widespread of bankruptcies and liquidations, including potentially exacerbating the supply chain, right? Already causing inflationary pressure. That's important, right? You could be messing up the supply chain issues. Now, if there's a general crash in asset prices caused by higher rates, Weiner expects gold to crash less and recover more quickly than other assets, even more pronounced than in 2008. Now, what happened in 2008? That's important. That's a very important date. Credit financial crisis, right? Led to recession/depression. $1 billion stimulus then led to $50 silver. That's in a 3-year period, 2008 to 2011. Just like they mentioned, 2008, 3 years led to $50 silver. Imagine today's time. The same situation, 2008, let's compare that to 2020. Recession/depression, credit financial crisis, $1 trillion stimulus. So only the difference so far is trillion. And by the way, I don't even think the human brain can fathom how much bigger of a number a trillion is than a billion. So in 2008, it was $1 billion stimulus. Now it's $1 trillion stimulus, and a global situation, and a massive silver shortage. So if that led silver to $50 in 3 years, imagine what it could do today, since today is so much more extreme, right? We're living in crazy times, but expect crazy prices. So expect the Fed to do an about face and, again, lose credit, spurring demand for gold and silver, right? Our financial system is funny. It's like It's like trying to pay off a credit card with another credit card with another credit card. It's going to catch up, right? It's going to catch up. So, at its core, the monetary metals model analyzes spread changes between futures and spot markets. So, such changes indicate either relative abundance or scarcity in gold and silver and the historical trends of each. Periods of abundance typically precede downward price movement, while periods of scarcity opens the opposite. Basically, this model does have limitations. It's more accurate in the longer term. Longer term predictions require analysis over the macroeconomic factors. Now that's obvious, right? A wrench could get thrown in next year in 6 months completely, but over the long term, and that's as a silver stacker investing, you shouldn't be selling anytime soon anyways. You should be in for the long term. When do you plan to sell, by the way? Is it in 5 years, 10 years, 15 years, 20 years, never? Me personally, like 20 years, right? I'm 29 years old. My daughter's only 1 year old. I mean, me personally, I'm looking at this as throwing all my money in like a time or real money in like a time vault and just keeping it there. Because I know if I left my money in a bank account, the purchasing power would be just eating it away. It'd be like rats just eating my money away, like those big, like cartels and stuff. They they have so much money. The rats ate like billions of dollars or millions of dollars of their money from storing it somewhere. But seriously though, like your money's burning away in your bank account. So, anyways, other factors contributing towards a rise in inflation and subsequently gold prices include trade wars or more broadly economic nationalism. It is not simply tariffs, it's also the response of many corporate supply chain management departments to buy less from offshore sources, especially certain jurisdictions, and shift to buying more from preferred jurisdictions. The high-tech sector, and likely many others, reevaluating their dependency on Chinese suppliers or looking elsewhere. Changing supply chains will take time. So, there's obviously green energy restrictions, fueled by bans on production methods, use fracking and power generation methods such as oil, coal, nuclear, and it's going to keep prices high. So, I mean, at the end of the day, and they mention it right here. Producers cannot increase the quantity of goods in response to higher prices or even profit margins. Profit margins are not necessarily increasing as input costs are also rising. So we have this situation, and a great example of this was right when the situation hit. I can't say the names or this video won't do good at all if it even gets promoted or recommended, because that's how the YouTube algorithm works. But anyways, 2020, right when the situation happened, Mexico, Peru, Chile, Australia, China, those are the main. Mexico and Peru alone produce 40% of the global silver supply. They got hit hard from the situation. Plus, there was all these boundaries and borders. There were, red districts where you couldn't send anything, goods or services, to another. So the silver supply chain got extremely disrupted, and that's also what led to such a terrible situation. U.S. Mint ran out of Silver Eagles in 2020. Nowadays, U.S. Mint just sold 5 million in the first month of January. Perth Mint, Royal Mint, all setting record highs. I mean, look right here. Where was that article? Silver demand seen hitting record highs this year. And it's not just from the U.S. Mint. We're talking about, look right here, 11 billion ounces, 11 billion, or 1.1 billion ounces, sorry, this week. So 8%, that's a lot. 8%, 1.1 billion ounces. So usually the production or the supply is around 900 million. Now they're talking about the demand seeding 1.1 billion. That's a lot. I mean, think about it. The U.S. Mint only produces around 13 million ounces, and they had a shortage. They couldn't even produce 13 million ounces. They had to put a limited minted cap on the Type 1 and Type 2 Eagles, even had to put out an emergency million supply at the end of the year from the San Francisco Mint. So, like I said, 2025 is when I think we're going to hit triple digit silver, because this is all just the start. But imagine in 3-4 years from now, what the numbers are going to look like, what the demand is going to look like, since we're going to need so much more for these solar panels and 5G towers, and that there's less and less silver to produce. That's when we're really going to see the silver shortage come to light, which could push it to triple digit. It could be sooner, but I know how silver is manipulated, and I know about all that. So in a perfect world, yes, silver should already be way beyond $100. But we know the reality. So anyways, I thought this is an interesting article. I guess we can also go over this one as well, since we still have some time. So do me a favor real quick, like the video. If you're a true silver stacker, like the video. Liking the video does so much, and even leave a comment. Just say what's up, or say something that you thought while I was reading it. Please like the video. It would help so much in commenting. You know, I put a lot of time in preparing and recording and editing, and you know, YouTube obviously isn't going to push channels that expose the truth. They're going to push beauty channels, gaming channels. You know, I really want the silver stacking community to spread. I want this to be more mainstream. Wall Street Silver did an excellent job of that. And, you know, like I said, I have a role to play of getting this content out there. But I feel like, you know, you guys really can help lead the way as well. So you guys are equal. It's not like I'm doing, you know, making these videos. I mean, you watching the video is just as important as me making the video. So I really do thank you all, and I would really appreciate it if you did like the video and comment. Because I know how it is when I watch videos, I rarely like or comment, but if it was for a cause like this, I definitely see more value in it than just giving someone a random like. So yeah, I'm gonna wrap this video up here, but oh wait, no, I didn't even go over the article yet. So let's do this. So CPI, which is Consumer Price Index, which my co-host on the Silver Stacking podcast breaks down beautifully, and also incorporates that with silver. I really hope you watch that podcast. He's so smart. He's a chartered financial analyst. He is a genius. I'm talking, he'll put models together and compare it. Like when he talks, it's like a foreign language, but he's so smart. So anyways, shout out to Investing with TJ. But anyways, the Consumer Price Index, which measures the cost of dozens of everyday consumer goods, surged a sizzling 7.5% in January from a year earlier, the highest inflation reading since February 1982. The hot inflation numbers come at a crossroads for the U.S. economy, with 2021's rapid growth expected to slow this year as fiscal and the monetary stimulus fades. Growth is still expected to be above trend, though sharper rate increases from an inflation-fighting Fed could prove troublesome, sparking talks of recession looming on the horizon. So if you're wondering just how high silver prices could get, you only have to take a look at what's happening across the entire commodities complex. So they're saying last week oil prices crossed $93 a barrel, and oil is very important to look at compared to silver. I actually made a video about that, and TJ actually talked about that in our last podcast. He put a model, and he includes oil in his model. But right here, they crossed $93 a barrel, and for the first time since September 2014, rallying more than 47% from their November lows. Elsewhere, many other commodities ranging from aluminum, lithium, to iron ore surge past multi-year highs. With that in mind, it's only a matter of time before silver prices eventually catch up with the rest of the commodities complex. And that makes sense, right? Silver is going to be later to the game, since it's mixed in with gold, so it has this pull of gold and the industrial sector, but there is spoofing. JP Morgan, Merrill Lynch, Dutch Bank, they're manipulating the silver market on the COMEX, or not even on the COMEX, on these exchanges, billions of dollars. I mean, the videos that I've covered over the last 2 years are insane to see the degree that they are spoofing. Now, spoofing is placing a false buy order or sell order on an exchange with the intent to cancel the order before it goes through, basically manipulating everyone else on the market to think there's more volume than there really is, affecting the other person, other investor on that exchange's opinion or perception. And then JP Morgan will use that to their advantage to then trade and profit from it. So they're putting this false narrative out on these exchanges. Now the trickiest part is you're allowed to cancel buy and sell orders. So how can you catch someone with the ill intent to purposely put out all these numbers knowing they're going to cancel it? That's the hard part. But JP Morgan's obviously at the forefront. 3 of their employees got sent to prison for this. It's very serious, and I know it does affect the price. But my co-host made a good point. I asked him about what does he think, because he would be the one to know. He says he does think it affects the price, but only in shorter stints. Because he said the biggest pull is going to be, interest rates, inflation, the dollar index, even supply and demand. Those are going to be the biggest pulls. So I thought that was interesting and a good point. So anyways, yeah, I'm going to wrap this video up here. Hopefully you found this video educational, informational, at least entertaining. Like I said, please like the video, please comment. It would mean a lot to not only me but also to the silver community, as we really try to take over this year and put our foot down and make an impact on YouTube. So yes, thanks for tuning in. Go check out my last video. Also go check out the Silver Stacking Podcast. First 1,000 subs are going to be entered in a giveaway to win some free silver. And if this video hits 500 likes, I'll be doing a giveaway as well. See you guys soon. Peace.